Good afternoon, everybody. Going to go over our Forex trades for today, Monday, February 6, 2017. We did liquidate a correlation position, which we had on for a few days between pound dollar and pound Canadian. It was a correlation slash scalp type of a trade. We'll go over that in a minute. First, the economic news actually from Friday and today. Non-farm payrolls came out much better than expected, although the inflation rate ticked up even with 227,000 new jobs being created. Doesn't make sense there. It ticked up to 4.8% unemployment rate. Average hourly earnings rose just 0.1%, well below the estimate, so that's concerning. The growth, the jobs, I should say, was in the retail sector, construction, financials, technical services, again, bartenders and waiters, and then healthcare. So it was kind of spread out. So that was a good sign for sure with the job creation. But the fact that wage growth remained well below estimate created a sort of a dovish view. And the odds of an interest rate hike in March fell to about 30% chance. So it looks like the street is thinking it's not going to happen. Goldman Sachs came out and said the probability of at least one hike by June remains a solid 80%. So, you know, the Fed told us, I think they said 4 times this year. You know, here's Goldman Sachs saying 80% chance of one halfway through the year. So we'll see what happens there. And then this morning we had not much news, but we had Mario Draghi speaking. He said the ECB says governing council is prepared to increase the asset purchase program in terms of size and or duration. Says benefits of loose policy outweigh the side effects. Obviously, he's all in on the new norm. He's purchased 2.16 billion euro in euro corporate bonds in the past week, ended February 3rd, totaling 60.98 billion euro, over 10% of all outstanding corporate bonds in the European region. So absolutely amazing, without a doubt. Bill Gross was out saying without QE from the Bank of Japan and the ECB that the U.S. economy would sink into a recession. So I don't know about that, but you know, hey, it's Bill Gross, you got to listen to him. So let's get to the trades. Like I said, it was a correlation slash scalp type of a trade. The call was in pound dollar to be short for 1.25092. You can see what happened, went against us right off the bat, but since we were correlated with the pound Canadian, we were not stopped out. So it gives us a lot more wiggle room for the trade. We had 30% of normal size, really only because pound dollar, pound Canadian, they're pretty volatile pairs. So we had 30% of normal size, and the pound Canadian with 10% of normal size. That's a very volatile pair. So we were short this. We ended up covering this morning 1.24542, picking up 55 pips, or size adjusted 16.5. And you'll see what happened here on the pound Canadian. At the same time we were short pound dollar, we go long for 1.63901. It was in our favor, but again, we only have 10% of normal size compared to 30% of normal size. So the overall position while this was happening was down. And then the sell-off came in the pound, and pound Canadian fell with it. And we liquidated that this morning at 1.62815 for a loss of 108.6 pips. But again, 10% of our normal size because the call was in pound dollar. So we lost 10.9 pips there. So overall, we finished up 5.6 pips without taking much risk at all. So we'll take that every day of the week. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out to be coming your way, we'll be back tomorrow. Assume we get some action tonight, tomorrow morning. Have a great rest of your day.